All right, what's up, guys? It's Joe with Schematic Solutions, and today we're going to be backtesting USDJPY. Let me put them in. Perfect. All right, so we're going to just be starting off from a 4-hour point of view right now, and ultimately this is considered a lower time frame. Now, 1 second. All right. So as of right now, this point on the chart, could we agree that this is our high? This is our high before it, which would make this the low in between that's maintaining.
Yes.
Perfect. So that being said, we're then going to look for our point of interest, right? Now we want to ask ourselves, where's our extreme and where's our break of structure point of interest? I'm pretty sure we could agree this is that push down before the push up move that causes the break of structure, right?
Mm-hmm.
Perfect. So with that being said, we are looking our last drive as our break of structure point of interest. If price comes down inside of here, anywhere near the 50%, gives us the schematic perfect. Now, we also have our extreme, which I'm personally looking at is this drive down here. 50% isn't mitigated, 80% isn't mitigated. So as price comes down, we'll be looking for the schematic as well. Now, the reason why we're not placing risk on it is because 80% covering the low is 23, 24 pip stop loss, and it's just ultimately not worth it. So as price comes down to both of these areas, we'll just be watching for a schematic. And I will scale to a 1 hour and we'll just allow price to play a little bit. Now, at any point, if you have any questions, feel free to stop me and we can talk about it as well. So price is trading down. And we just get to the 50% of the break of structure point of interest. So now we can really start watching for some type of schematic, and we could even scale down to something like the 15-minute.
So at this point, you'll be setting your alerts at the top and the bottom to see if it breaks out.
As of right now, not yet. I'm just really waiting to see if the schematic builds, which as of right now, price giving us this little trading range, we could say that this is a possible schematic. So now what I would do is place my alert right above here, and that would just let me know we're getting the confirmation of the spring, right?
Mm-hmm.
So we're just waiting. Keep in mind, this could be the start of our schematic. This could be climax to AR, but more so, we did just confirm the price action that we were just talking about, setting our alert up here. So that lets us know this schematic is valid. So what we can do, so let's just let this play. Let's get that solid break, which we already did. So now we could really start looking for some re-entries. Now, measuring our spring, let's see if it's worth it. 80% covering the low is about a 11 pip stop loss. So it's relatively chunky. But let me ask you, do you want to place some risk on it, or would you like to wait to see if you could catch a cleaner entry from another schematic?
I'd rather wait.
Got you. Sounds good. Now, just allow price to do its thing. We'll make this a little faster. There we go. All right, so now price is just broken some order flow. So we broke this order flow up here. If we were looking at this as a type 4 schematic, our descending wedge, we would have just confirmed that schematic, right, with the break of structure and the exit of the trading range. So now, with that being said, are you still going to be waiting for a schematic? You willing to throw risk based off of it being two different types of schematics? How are you looking at it?
I guess how I would look at it is based on the stop loss of the point of interest area.
Got you. So now we would still be looking at the same exact area, which would be here, which is giving us about a 10 pip stop loss. Now, let's look relative to where we're going to be taking this order. Obviously, just getting back to our current high that we're at would be a 1 to 14. Anything higher would be perfect. And obvious, as we scale up back to that 1 hour, we understand ultimately our main goal is to get back to this high, right? Which is about a 1 to 26, 1 to 27. So that's the goal where we're shooting for. Now, as we get back to the 15-minute, let's watch. We'll allow price to play. And this is good. She's walking herself down relatively nice. She's not just dropping. All right. So could we agree that there's possibly a schematic forming? Could we say maybe this is our climax to AR to maybe a secondary test, and even the secondary test may have a schematic inside of it? Perfect. So with that being said, I'm willing to throw some risk off of the 80%, as the 80% of this order is 10 pip stop is a 10 pip stop loss. We're starting to accumulate right above it. So ideally, if we throw our risk, what we would like to see is price tap us in and then break structure, exit our trading range, and we would look for the re-entry off of this schematic, right? Perfect. So we'll allow price to do its thing. And there's the tap in. So far we have our climax to our AR, secondary tests, and our secondary tests in phase B. Now, well, what's going to confirm this is our secondary test in phase B is breaking structure and exiting our trading range. So we need our trading range to be exited. And boom. She exited our trading range. And at this point, I would be looking ideally. This is our last drive. This is the secondary test in phase B. And obviously 50% was mitigated. 80% hasn't. So how do you want to play it? I'm personally looking to just sit down at the 80% to see if we can come down a little lower. But since 50% has already been mitigated, are you looking more so at this price action here that mitigated 50%?
Come again, please.
Oh, got you. So ultimately what I was saying is, so I've measured out my secondary test in phase B. 50% has already been mitigated.
Yes.
So with that being said, are you, or would you be looking at 80% and looking at what mitigated out of 50%? Are you only looking at what mitigated out of 50%, or are you only looking at 80%?
I think I'm going to look at 80% because because of the stop loss, like if it's still high, I think 80% would be better. But if it's
Absolutely.
something very decent, then I would consider what triggered that 50% breakup.
So 50% covering the low would obviously be 25 pip stop loss, but luckily for us, we wouldn't be taking that 50% as it's already mitigated. More so what we would want to do is measure this last drive here. And 50% covering the low of the drive. Oh, that's awkward. That is awkward. 50% covering the low of the drive is about an 18, 17 pip stop loss. So still pretty chunky. So it looks like we're just going to have to sit on our hands. 80% is about that 8 pip stop loss. But just like you said, I would more so be more interested if price could come down to our 80%. As we allow price to play, we see she makes a new high. So she ends up playing out of this drive. Unfortunately, weren't able to catch the entry. And now we're just going to see if we can catch some continuations. So ideally, could we agree that this is our high before it, and this is our low maintaining?
Yeah, and actually looking at it, it actually formed like a SOS. So it makes sense that it came to that. Oh, actually, never mind.
You're talking about right here, right?
Yeah, like it broke out of our trading range. So it makes sense that we would consider that at 80%. That's what I'm saying.
Yes, exactly. Nice. And once again, we got another sign of strength. So we can just measure out our drive here. And we see 50% lines up perfectly with this break of structure point of interest, right? This is the last push down before the push up that causes the break. So that's obviously not the perfect confluence we'd like, but what we can do is then measure this drive and we can decide how we want to play it from here. So now how I'm looking at it is obviously 50% would just not be worth playing, right? As covering the low, even covering the low of the break of structure point of interest, it's a 14 pip stop loss, which is relatively ridiculous. Now 50% covering, so 50% of the break of structure point of interest covering this low is a 7.4 pip stop loss. And the reason why we're even looking at this break of structure point of interest is because 80% is already mitigated. So we can't look at 80% of this whole move, right?
Okay.
So that's why we had to move up, move on. There's some nice confluence between 50% and the open, but that's just, it's a little too much. So obviously we're gonna have to play either 50 and or 80% of this move here, right?
Yes, because 80% has been mitigated. Makes sense.
Perfect. So do you want to wait for a schematic or are you willing to throw some risk?
Oh, I would throw some risk because it's way smaller than what we had before.
I definitely agree with you. So we have our 50% order. We have our 80% order. And our target is still going to be the high all the way up here. Obviously, this is more so a longer term target. We would definitely, without a doubt, have some lower targets. So like, especially once we come back and take out this high, I guess that would be, let me see. Yeah, that would be our first target. As we trade down, we're going to talk about the second one. The second one, we're most likely going to be able to take a target right up here, if and only if it lines up with being that 1 to 10 risk reward. And I may have to scale down just so, no, I'll be good. So coming up to this high, looks like it's a 1 to 8 or a 1 to 9. Yeah, it's about a 1 to 9.75. So that will be the first target relative to our 80% as it's worth it. And obviously, we'll talk about where we're taking partials as the trades run. So we can allow price to play. And we see we get tapped in relatively quick, and prices build a nice little schematic for us. Could we agree?
Mm-hmm.
We have 1 drive, 2 drive, 3 drives. And so far we've broken structure and exited our trading range, and obviously took out and made the new high relative to our order flow. So ultimately we're taking that first partials relative to the 80%, and we're reducing our risk. So 80% would be risk-free. Our 50% will be right underneath this low.
Yep.
Perfect, perfect. Now, do you want to look for some reentries, or do you want to just let these run?
I mean, I think, have we gone risk-free by breaking structure?
So yeah, we're risk-free based off of this break here.
Oh yeah, then I don't think it hurts to try to enter again, since you have 3 entries per day.
Nice, nice. So would we say this is the last drive we'd be trying to play off of next?
Yes.
Nice. So measure her out, 50 and 80%, and let's allow her to do her thing. And we may want to scale up to the hour at this point. Well, we don't have to, or we could just stay on the 15-minute. So here's where we're taking our first partials relative to the 50%, which would be about a 1 to 16. And we're taking our second partials relative to the 80%, and that will be about a 1 to 32. So as of right now, we're really just waiting down here. And if we kind of get an update relative to our order flow, we have our high before it, our low maintaining. So we're just waiting for price to retrace so we can continue possibly buying. And once again, we're looking to see if price can take out this high up here, right? Give us the new high and continue walking price up.
Mhm.
So we'll just be watching. So could we agree this is a distribution?
Mhm.
Now, my question for you is, do you want to attempt to play the distribution? Do you want to get into some sells with us being in buys? Do you want to ignore the distribution and just get into our buys? How do you want to play it?
Um, because I don't like to counter trend, I would just rather wait. But I guess, if I'm excited, it would be a great opportunity to perhaps practice the distro on my demo and see if it's a potential entry to write it to our POI. But I'll be more aggressive, obviously, with my exit.
Definitely, definitely. So let's say we're just going to be demo trading it. How would you be measuring your last drive?
Is it possible to zoom so I can see? Okay, that's good. So, can I annotate?
You should be able to, yes.
Oh, no, not this one. Annotate. 1 second. Would it be here? To here?
Got you. So we definitely could measure that. The first thing I personally would measure would be the larger move, but then I would, without a doubt, measure the smaller move relative to it to see if there's anything that lines up, and can we agree these 80% line up pretty nice?
Yes.
Perfect, perfect, perfect. So we have some relatively nice confluence. So just like you said, maybe let's throw some risk at this on a demo account. So let's see, 50% of the smaller move covering the high. Ooh, sheesh. It's 11 pip stop loss. So that's a little chunky. The 80% covering the high is a 7 pip stop loss. So let's throw a little demo trade at this. And let's see if we can stick or if we hit stop loss.
Oh, wow. That's nice.
So unfortunately, she did come up into 50%, but she wouldn't have filled us at 80%.
Oh, I see.
She would have just missed us, unfortunately. So it is what it is. We'll just continue looking for our long positions, right? So we're ultimately waiting to see if price can come down inside of here.
Mhm.
If at any point you'd like me to pause, just let me know. And it looks like she's not trying to come down to us. And we could actually pause it right here because I actually remember this was where I worked in one of my orders a few weeks ago. I believe we went a little too far back. So it was about right here. So scaling down to something like the 5-minute, we saw price trade down, but she just didn't trade into our area. And from there, we taken out some lower time frame order flow, right?
Mm-hmm.
So at this point, we were up in the morning. We got our high here. Got our high here in London session. And ultimately, we had a reaccumulation. So I decided to measure out this drive, if I'm not mistaken. And I had my risk off of 80%. Is that correct?
50 is what I see.
Yeah, 50 got tapped in here. Let me see, what was 50%? So 50% was a 6 pip stop loss, but if I'm not mistaken, since it was already mitigated, I only threw risk off of 80% at this point.
Okay.
So we'll throw some risk off of 80%. Just looking for that continuation move. And price ends up coming back and just missing us. Just missing.
I remember this.
Hell off. So I was like, ay. So at this point, all we can do is kind of just watch, rinse, repeat. And we could scale up to something back like the 15-minute. And ideally, if we're just playing order flow, what we could do, we could measure out this last drive, right?
Mm-hmm.
Now, is 80%, 50 or 80% going to be worth it here? 50% covering the low, 19 pip stop loss, so definitely not worth it. 80% covering the low is an 8 pip stop loss, so even that's a bit chunky. So we could just wait to see if she wants to build a schematic for us, not going to force anything. And keep in mind, if price could just continue pushing up, it's all good. We're already in 3 orders, so we can't complain,
Mm-hmm.
So we're allowing price to do its Dougie. She's coming down to us, and she doesn't give us the 80% order that we wanted to catch. And obviously, based off of this time frame, we don't see any type of clean accumulation to allow us to take the order, the reentry. So as of right now, we're still just inside of those orders. We're waiting to take out this high here. Once we take out this high, we could take Oh, we didn't catch that order. Never mind. I was going to say we could take our partials on that order, but obviously we didn't catch it. So now we're just still waiting for price to come up to this high right up here. And we just got extremely close to it, but haven't been able to break it yet, right?
Mm-hmm.
So now this is something that we definitely want to pay attention to. We failed to make the new high. We failed to
No.
make, sorry, what was that?
Yeah, we failed to make a new high and we broke, seems like we broke order flow.
Yep, we definitely broke some order flow as well. So with that being said, would you be willing to hold your buys, hold your long positions and attempt to get into some short positions?
I guess so. It's not something that I will do. I'm not yet a pro, but I guess it's something to consider. I just would be confused based on like what schematic I'm seeing because of that spike. Like, where would I?
Got you. So ideally, like if we're talking about the exact schematic, I would more so call this a type 4. Where's my annotation? To where we have our climax, AR, secondary tests, up thrust, and our U tab. So ideally, in order for us to really look at throwing some risk at this, we need the break of structure and the exit of our trading range, which unfortunately we just haven't done yet. So as price is working itself back up, in order for us to catch an entry, we have to get a distribution.
Okay.
Perfect. Now, if I can get out of my annotation, could we agree that this is possibly something that may turn redistribution? Because we have our accumulation forming, we have our ice forming. So all we need for the redistribution is a break of the ice and a break of structure to the downside, correct?
Mm-hmm.
So with that being said, would it be valid for us to start looking for our distribution from up here?
Yes.
Nice, nice. So let's scale down because it looks like price is printing something.
Looks like 3 drives.
Yep. We have 1 drive, we have our second drive, we have our third drive. So ideally, we would like to see price break this point, correct?
Mm-hmm.
If she breaks, we can start looking for some entries. Is she gonna break? Unfortunately, it looks like she's not. Nope. So it looks like she didn't break relative to where we wanted, and she's already mitigated out of our point of interest we were going to be looking at. She didn't come up into the 80%, which means at some point it will still be valid, but she did mitigate out of 50%, right?
How many SL would that have been? Would that be fair?
So it really doesn't matter too much because we never got the confirmation of the schematic, but 50% covering the high, it's about a 60 pip stop loss. So it's definitely not worth it.
Yes.
Definitely not worth it. So as of right now, in order for us to look for the entry, all we can do is wait for the overall redistribution to confirm itself, right?
Mm-hmm.
And this will scale back up to something like the 15-minute.
You broke it.
So yeah, we finally broke it. So at this point, we're really going to be looking at this drive here, this last push up before the push down, and 80% still, right?
Mm-hmm.
Perfect. More so the 80% now that we've broken this low, because we have our low before it, which means the highest point in between is what's maintaining. So this is what keeps our 80% up here valid. And we can kind of zoom out a little bit, because next time I look to take an entry, was after this new low is made. We come around, I believe it was, yeah, it should be coming up soon. Perfect. So we make our new low. And can we agree, just relative to the basic order flow, that we have our low before it, and our high maintaining?
Mm-hmm.
But now, due to the fact that overall, this redistribution caused this low, it's still valid for us to come all the way up here. Just when we're talking about lower time frame, we're going to, first things first, treat this as a breakup structure point of interest.
Mm-hmm.
So we'll be looking for our schematic from it. Now, more so, if I clear that up, we can measure our last drive, and it's extremely clear to see based off the 15-minute right now. That's our last drive, our last push up before the push down. 80% is still unmitigated. So we'll wait to see if price can come up and give us a schematic from this price action. Scale in. So maybe something like the 5-minute. And can we agree that there's a schematic printing?
Yep, it's compressing consolidate.
Yep. So boom, we confirm. Now, you willing to measure this? This is our last drive and look for some entries.
Sorry, where are you measuring from that bottom? Why not the middle? That's not a drive.
So, because if we measure our trading range of our schematic, our client's AR, a drive must trade back to 50% to count as a drive. So we have one drive, we trade back to 50%. We have our second drive, we trade back to 50%. And if I get my annotation tool, this next drive fails to trade back to 50%. So that means this whole move is our drive.
Wow, okay. Thank you for that.
Of course. So that's the reason why I've measured the whole thing. Now, if we kind of look to see how many pips stop loss is going to be, 50% covering the high is a 10 pip stop loss. So it's relatively chunky once again. 80% covering the high is a 5 pip stop loss. Let me ask you a question. Are you willing to split your risk between 50 and 80 to look to possibly hedge in some sells finally? Or not?
I could, like it's demo, then yes, I will.
Gotcha, perfect.
I will.
Perfect. So we're taking this on a demo account. We want to just see how things are playing out. Our 50%, we have our 80%. And now a target. So ideally, this would be our first target, but unfortunately, it's not worth it for 50%. So unfortunately, that would stop me from taking the 50%. But 80% is worth it, as it's a 5 pip stop loss and a minimum of a 1 to 15 to our first target, right?
Mm-hmm.
So 80% makes the cut, 50% just misses it due to the R to R reward that we need.
Mm-hmm.
And it looks like price is building a schematic here, right?
Yeah, it's coming to 50.
She just missed 50%. Well, she's tapped in now. She has indeed tapped in now. And it looks like our 80% was just barely tapped in as well. So
barely? Oh.
Just barely 80%. Yep. So 80% was filled. At this point, we are finally in our hedge sell. So our first target is obviously going to be this low, and then we can look for some reentries.
Looks like it's Kimi. Oh, we missed it.
Where are you looking right here, this last drive?
Yeah.
Yeah, unfortunately, I was assuming that we are going to make the low and then be able to play out of it. But if we measure it,
Oh, okay. I see what you mean.
well, like it definitely would have been a good entry. I just wasn't paying too much attention to it right now. But we could see she's already tapped into 50%. So that's a missed trade on our side. You did see it, so great eyes. But 50% covering the high, it's pretty chunky. It's still going to be about that 12 pip stop loss. So it definitely would have stopped us from taking that order, right?
Mm-hmm.
But we
I guess if
just,
sorry.
no, what was that?
I said, I guess if we zoom in at that 50% on the maybe 1 minute or like 30 seconds, there was another schematic that was formed at that tapped area on 0.5.
Around here.
Yeah.
Got you. Ideally, I would like to scale down to something like the 1 minute on it. I just don't think we're going to be able to get back that far because after 9 days, they start deleting the data within the lower time frame.
Oh, okay. Okay, that makes
Which is
sense.
the only reason why we're not scaling anything lower than the 5 minute right now.
Makes sense.
But yeah, so ultimately, we are just now coming down to our low. Boom, we take our partials, and now we're looking for possible reentries. So would we agree we can look at this drive here, and we'll most likely just wait for a schematic, as I'm pretty sure 50 and 80 are going to be just too large for us, right?
Mm-hmm.
Well, 80% is decent. It's a 6 pip stop loss. 50% is 14 pip stop loss. So what do you say? Do you want to throw some risk at the 80?
Mm-hmm.
Perfect. So just going through, throwing risk off of 80%. Now, to get 80% back down to here will barely give us our 1 to 10. So it's worth it. 6 pip stop loss, and we can press play. So you see price tapped us in, gave us a little move, and took us out. So stop loss. And obviously this trade would have been stopped out break even. And now what we've done is we traded all the way back up into our redistribution area, right?
I have a question. So where did this mitigate from on the left? Is it like a potential like
Let's check it out.
me?
Great question. So ultimately, if we were to measure this drive here, we didn't come down into 80%. So it just came into 50% of this drive, which technically is an accumulation with our terminal shakeout, our terminal spring, which is ultimately just means our spring is extremely large.
So when it falls like that, it means it's a terminal spring?
Yeah, so if you ever have price action, smaller consolidation, smaller compression, and then you get an extremely large drop, this has the potential to be a terminal spring, but what actually confirms it is price breaking structure and exiting the trading range.
I see.
So yeah, that's where price ended up playing out from. Now the thing is in order for us to look for buy positions off of here, I want one of two things to happen. I either want price to bare minimum break this redistribution because we're currently inside of it. So if we don't break it, then that ultimately means we're most likely playing from it, right?
Mm-hmm.
Or I'd like to see that brand new high made, the same high we've been waiting all this time for as our like main target. So we could really just wait, see if price comes up and builds the schematic out of this point. And especially on FXCM, I actually remember price action got a little hectic. Yeah, here it goes. So once we started seeing all this price action here, all the wicks, I kind of was just turned off by it. She didn't give us the clean distribution from it, but we do not break this high. So that means it's valid. Now, in order for me to look to play something out of here, I need the new low made, right?
Mm,
If we get the new low made, we can look to play out of it. If not, we just have to wait for it, a completely new schematic. Now, I'm not sure if you saw this down here. I didn't really dive into it, but just looking at it now, without a doubt, there was, oh, so this was from last week, actually. Where I personally took an entry off of, let's see how low we can go. How low can we go? Let's see.
5 minutes.
Perfect, perfect, perfect. So I took an entry here. I was looking at 50 and 80%, looking at 50 and 80% of this drive here. Now, I'm not sure if you remember, I threw my 50%, I deleted it because I was being a little picky and ended up just placing my 80%. She ends up tapping in, breaking structure, obviously, and tapping into 50% and pushing and making a new high. So at that point, I decided to delete my 80%. Price then comes around and gives us our spring. So this is an example of price. Sorry, excuse me.
Let's see.
Oh, sheesh. Sorry. I had to drink some water. I don't know what that was. It was felt like I had a pepper, like a little pepper corn in my throat. That's crazy. But anyways, we get that spring. And at this point, we really have to just wait for price to break structure again. Break structure, exit our trading range, which would be here.
Mhm.
And when that happens, price just takes off. Give me 1 second.
Yes, please take your time.
Oh, yeah. I have no idea what's going on.
Did you have spicy food?
Not yet. I haven't ate
Oh,
since early in the morning. Jeez.
I guess from like talking the one-on-ones and everything can.
Yeah, I've had
Yeah.
a lot of calls today. All right.
You okay?
Yeah, just bear with me. Sorry.
No, please.
Get my breath back. But yeah, we can start marking this up, clear my drawings. So yeah, we get nice little schematic here. Our climax to our AR, secondary test, secondary test, secondary test in phase B. The reason why this is our secondary test is phase B is because it's our last secondary test before we get our spring. So once we get our spring, we measure out our last drive, 50 and 80%, but we need this high up here broken. And she never comes back for us until when we'll go through it. We'll go through it. She doesn't come back to us yet. And we kind of just work our way up. And this is getting into my orders from this past week.
Is that what they call Judas something?
I have no idea what that is. Would you like to explain?
There's something called Judas Swank where like it just flies and doesn't come back.
Got you. Yeah, I definitely haven't heard of it, but I can try to look into it and see if I find out anything. Now, at this point here, we traded all the way back up into our 80% of the redistro.
Oh, yes. So I guess it's good not to delete certain things because it might come, it's a waiting game at the end of the day.
Exactly. So 80% comes up and gets tapped in. At this point, I'm starting to look for lower time frame, either distributions or redistributions to work in order, right? We just tapped into 80%. We want to take advantage of the sell-off that's going to be coming in.
So our POI down there, basically.
Yeah, exactly. To this one down here, bare minimum.
Mm-hmm.
So we allow price to do its thing. And my order comes in on Friday. We were looking, where does it happen? All right, so we actually have the bar replay. All right, so Friday comes along and based off of our break of order flow here, we had our low before it, and our high maintaining. I wanted to see the price come all the way up here, and I ultimately wanted to take an entry from it. Make sense so far?
Mm-hmm.
But instead of actually waiting up there, I ended up just watching for a schematic in general. And this is where hopefully we can scale into the 1 minute. We should be nice. So I scale into the 1 minute and we're just watching price. We're watching for that schematic. And price is coming along. And by the time I actually look, price was, where were we? So we sold off already. There we go. So we sell off, and obviously we saw our distribution start to form. We would have wanted to measure this last drive, but it was relatively already mitigated. So we wanted to just watch for another distribution from up here, right? Makes sense so far?
Yeah.
So we can scale into the 13 seconds, the 30 seconds. And once again, we get a distribution. Can you identify it?
Yep.
Ultimately, the most important part is our last drive here, which would be right there, right?
Yep. Bless you. I think.
Sorry, what was that?
So you measured from here to here?
Exactly.
Okay, so this broke here and then okay.
Yep. So at this point, I was watching purely just the 80% because 50% was already mitigated here. 80% is wide open. So I threw my risk right off the 80%, covering our low. It's about a 1.5 pip stop loss. And this was actually one of my only runners from last week. I ended up getting tapped into S&P, but I had to close it out in some relatively quick profits just due to the time that it tapped in on Friday. And the rest of the week was relatively dry. So I threw some risk at this, and I was just hoping that I could at least bare minimum get price down into the original area we wanted to see price get down, which was down here, right?
Mm-hmm.
Side of our spring. So coming back up, allow price to play. We end up getting tapped in, which actually confirmed. So like we could say that this is our distribution. We obviously break, price comes up, we get one drive, we get our second drive, we get our third drive.
Sorry, where was your stop loss again? Like, where is it? Sorry, I can't probably.
Stop loss is right above this high. So this is our entry, 80%, stop loss right above the high.
Oh, okay. So I guess with me, I would have done it to the one before, like here. Because to me, it's like, okay, this one has broken structure, and then it's coming here. This has already been tested, so I wouldn't see the need to put my stop loss at this area.
Got you. So for me, the only reason why is because this is still the high maintaining, and it's really just a buffer. Keep in mind, this is only a 1.4 pip stop loss, so I wouldn't want to be stopped out of this position by trying to just be a little greedy. It's a 0.2 stop loss difference, and if I would have played this high, it definitely would have got stopped out. As you can see, or if I just draw a line. If we were to just play that high, we definitely would have got stopped out. So just with that in mind, when it's not too much of a difference, I'm always willing to just throw the extra 0.2 pips.
Okay, but usually would you do it to that one that we originally had, or
So,
like
yeah.
Okay.
So yeah, so like keep in mind, let's say something like our type 5 schematic, to where we have our climax, our secondary test in phase A, and our secondary test in phase B. We're always measuring, obviously, our secondary test in phase B, but our stop loss has to be here.
Oh, okay. Oh, yes. And I see we were saying it wasn't fun to use basically because of how high the stop loss would be. Or was it another type of schematic?
No, that was the type of schematic we're talking about. But with this scenario, since we're on such a lower time frame, 30 seconds, it was worth it for us,
Makes sense. Okay.
So there's where we got tapped in. And now ultimately, in order to look for some re-entries, I want to see this broken. Now I chose not to look for re-entries due to the fact that it was Friday. It wasn't late in the day, but I was relatively done with my trading week. The only reason why I threw risk at this was because I didn't have a bad trading week and I didn't have a great trading week. I just kind of had a relatively break even. So I wanted to see if I could work in some orders. So I was happy with just a single order, but ideally, if we wanted to throw some more risk, we wait for that to be broken. And then would you agree that we would measure this as our last drive?
Yep.
From low to high and look for some re-entries?
Mm-hmm.
Perfect. Now, 50% covering the high is a 3 pip stop loss. Is it worth it for you?
Yeah, it's not bad.
And obviously 80% will be worth it as well, as it is only a 1.2 pip stop loss.
Mm-hmm.
So boom. And then once again, bare minimum, we're expecting price to come all the way back down. All the way back down, at least to this level. So possible 1 to 20 and a possible 1 to 50 coming down here. And if we allow price to play, price comes up and just misses our 50%, unfortunately, and she takes off from here. And I know without a doubt she doesn't come back, so we could scale up to something like the 1 hour closeout price. And we can see, why are these not showing? Hold on. So ultimately, visibility, no, it's there, it's there. Awkward. So where price ends up close or maxing out on Friday from my first order, which was here. It says a 1 to 56, which is odd because Friday I could have swore it said a 1 to 61. Maybe it's a little different from where I initially took my order, but we could see all these orders maxed out at a nice little RR. The lowest one being a 1 to 25. We had a 1 to 56 and the 1 to 65. I believe price ended up closing out. Price ended up closing out. So price ended up closing out here on Friday, which was that 1 to 41, 1 to 48, and about a 1 to 20, if I'm not mistaken, 1 to 18-ish. So nice little order for a Friday. They obviously ran a nice little bit. I ended up taking my last partials somewhere around this price action down here. And yeah, that was pretty much my week with USDJPY. And that was that test. Do you have any questions?
So right now we are still waiting for the extreme accumulation area to be triggered for us to, because remember we had a reaccumulation on our POI at the bottom.
You're talking about right here?
Was it not lower? So way down? Yeah, at 80%. No,
I'm assuming.
it's not on the left, so it's here. Remember we said that the stop loss is pretty high and then we were waiting for this to be triggered.
Got you. So yeah, ideally, I'm expecting for price to come down here, and this will be one of the first areas I will be watching for that next accumulation. But ideally, I would like to see if we can just break underneath it. Now, the reason why is because we've been waiting this whole time for this high to be broken, and we failed to get the break. So just based off of that, I'm leaning more towards the bears in this scenario. But due to the fact that we are still maintaining some order flow here, as price comes down, I'll be looking for the hedge buy. But I'm still going to just be holding my sales and trying to continue seeing if we can come lower.
Makes sense.
So yeah, that's how I'll be playing it for this week. And just keep in mind, is it possible for us to come all the way down here? Yes, it is, because we have our high before it. This is our low that's maintaining, which means all of this in between, it's just noise. Price can, without a doubt, come all the way back down just to continue longing up.
Can I just say, okay, that's all right.
What was that? I couldn't hear.
No, I'm sorry, I was just talking to myself. Yeah, I was just kind of seeing where you measured your last drive for your POIs.
For this one down here?
Yeah.
Got you. So yeah, that's USDJPY. That's the back test. Did you have any other questions about it before we end up hopping off?
I just have a question. Is it possible that you kind of walk through, maybe it's too hard of an ask, but just more so like how you were able to get the because I'm trying to mark up NZD JPY or NZD USD, they're pretty much the same, from the monthly to just narrow it down to understand my train of thoughts. Is that something you did for UJPY to arrive where we are right now? Because I
personally wasn't too interested in anything over the 4 hour. This is purely based off of our lower time frame structure, which is here.
Okay, makes sense.
So like I could scale up to something like the weekly, but we're not anywhere near any weekly areas I really care for.
Okay, okay. So what you look for basically is like if it's close to an area for the weekly that's favorable or a potential like POI, then you would
Exactly. Then I would take that into consideration.
okay, 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 makes sense.
But if we're nowhere near a nice little weekly point of interest, either our break of structure or our extreme, then I just have to pay attention to lower time frame until we're inside of that weekly area.
Okay, okay, okay.
So
Because
yeah,
I
and
that's what confuses me because I try to see areas within like because I try to start from the monthly and then try to see where we are and then I'm confused, but it makes sense that if it's not at a favorable area, then you just look for booth.
yeah, I would say I would utilize the monthly and the weekly, maybe maybe once a month, if that. And that's typically just at the start of my month, just to get an overall view of all the charts. But typically week to week, day to day, I don't necessarily go any higher than the daily. I'm just from the daily to the 4 hour, because anything higher than the daily isn't going to change that much between a week from now, you know?
Yes.
So long-term trading weekly is obviously amazing. Just as we're getting more so inside of our intraday and our lower time frame, we definitely we could pay more attention to the daily, the 4 hour and the 1 hour. And then obviously when we're trying to refine our entries, we can scale lower.
Perfect.
Yeah. And then obviously on Tuesday, I'll have my outlook, and any assets you'd like me to check out, dive deep into, I can definitely do it.
For sure. Thank you for this.
Of course, of course. So I'll drop this recording inside of the Discord and you can feel free to rewatch it if you'd like.
Yes.
Nice. I hope you have an amazing rest of your night. I know it's like 11 o'clock your time, so I know you're ready to get to sleep.
Yes, I'm yawning. I don't know if you heard it, but yes, thank you so much for this. It's valuable.